To watch these important lessons, subscribe to DP Education's YouTube channel right now. Click on the bell icon to stay updated on the latest lessons. Sri Lanka's largest free online school, DP Education.
Hello everybody. Do you know what paper we are doing today? We are doing the 2017 Western Province third term paper. As always, I will just give you no, I'm not going to give you anything. I'm just going to start with the question. Okay. Well, as always, I wanted to give you the whereabouts. Where about are we with our paper discussions? But in every video, in every chapter, in every session, I do that. You follow me, or if you follow DP Education and other subjects in DP Education, and if you follow me in DP Education, you know where exactly we are. Where exactly we are right now. Where are we? We are doing the past papers, the O-level past papers and past provincial papers to prepare you for your examination. And this is the 2017. Let's put it that way. Let's keep it around here and use this space. I will use this space. 2017. This is Western Province, yeah. Western Province. Western Province. Third term. Third term paper. Third term. Paper 1. Paper 1. There we go. This is where we are now. Okay. We are starting today from the 17th question. 17th question because we did the first question up to the 16th. We did from the first up to the 16th. Those are the business studies questions. From 17th question, accounting starts. We know, right? You know, I know, so we know, everybody knows. 17th question upwards, up to 40, we have accounting questions. Let's go. Out of the following transaction, which transaction causes an increase in assets as well as equity? Now we need to select the transaction which increase assets, which increase assets, as well as equity. Assets as well as equity. Okay. All right. Increasing. A cash purchase of goods, 1,000, 10,000. It doesn't increase equity. Owner introduces his own motorcycle of 150,000 to the business. Well, that seems okay. Payment of the bank loan installment in cash, 10,000. Payment of an insurance premium of 4,000 in cash. Right. Do you know what is the answer? And the answer is 2. That's correct. Answer is 2, yeah. Why? Children, you should know, children, what transactions increase equity. What transactions, what items increase equity in a business. What transactions increase equity? Equity. There are only 4 transactions or events which can change equity. I'm saying change equity. Only 4 transactions. First one, if the owner introduces additional capital, that increases equity, and incomes or profits increase equity. Okay, so these 2 increase equity, these 2 decrease equity. These 2. What are the decreasing things? I mean, what events decrease equity? Drawings decrease equity, losses or expenses decrease equity. Okay, drawings and expenses. Additional capital and incomes increase equity. So you have to select the transaction with these 2, not decreasing equity, the transactions which has these 2, either an additional capital or an income. Cash purchase of goods, no additional capital. This one has additional capital. See this one, the owner introduces, there we go. See, owner introduces his motor cycle or motor vehicle to the business. Assets increase. Which asset increases? Motor vehicles increases in the business. At the same time, additional capital means equity also increases in the business. Both increases. 17th done. 18th. The impact of a transaction of the accounting equation is given. Assets has decreased. Okay. Assets have decreased. Equity also decreased by 600. Equity also decreased. Okay. Liability also decreased. How come? Oh, no need to think so much. You know why? Assets decreased 6,000. Assets have decreased by 6,000. Okay. And liability have decreased by 5,400. Liability have decreased 5,400. Equity has decreased 600, which means 5,400 and 600 both have decreased by 6,000 together. Together 5,400 and 600 means the total is 6,000 decreased from this side and 6,000 decreased from that side also. There you should first think about, they are asking the transaction which has been recorded in the above equation. What is the transaction which has happened here? There you should first think of any transaction which can decrease equity. See, equity has decreased. I just few minutes ago told you there are 2 transactions. There are 2 transactions or events which can decrease equity. Either it should be a drawing or expense or a loss. Drawing or an expense or a loss. Okay. But here, if you think of a drawing, it's not practically, liability have decreased, no? Liability have decreased. At the same time, equity also has decreased. Okay, let's check the transactions. Payments of 5,400 to Sudesh, a creditor. if we paid 5,400 to Sudesh, liability decrease, that is okay. That is okay, liability decrease. But how come equity has decreased? Second answer, sale of goods costing 6,000, selling goods costing 6,000 for a price of 5,400. That also I don't think that is the answer. But just check, just analyze the answer. Selling goods means goods go out of the business. Goods stock decrease. Goods stock decrease means it's an asset decrease. So this part is okay, 6,000 asset decrease. But selling goods worth of costing 6,000 for a price of 5,400 means how come liabilities decrease? How come liabilities decrease? Liabilities don't decrease. Liabilities don't decrease. Goods decrease, and if the goods were sold for 5,400 on credit, debtors increase. Debtors increase means if they don't pay us, if they didn't pay us, the customers become debtors. Debtors increase. Debtors are not a liability. So anyhow, it's not matching. Third answer, payment of a loan installment of 6,000. Then payment means this side okay because cash goes out. Cash is an asset. Asset decrease because cash goes out. Yeah, that's okay. Inclusive of interest 600. Interest means it is an expense. Poly. Expenses decrease equity. I told you, expenses decrease, losses, expenses decrease equity. So if out of 6,000, the payment of 6,000, out of the payment of 6,000, 600 is interest, only 5,400 is the loan. That's okay. That is the answer. Eighteenth done. 19th question. Use the following information to answer. Question number 19 and 20, both questions. Use the following information to answer 19 and 20. Several transactions taken place in Suresh's business for the month ended 2017 September 30th are following. Introduction of capital by the owner, 100,000. Cash purchases, sale of all the goods purchased building, payment of salaries, obtaining a bank. Okay. Use the following information to answer 19 and 20. What do they ask? What is the cash balance of Suresh's business as at 30th 9th? That's easy. What is the cash balance? That is what they're asking. What is the cash balance? Cash comes in from the first transaction. See, cash comes in first transaction 100,000. So 100,000 cash is in the business now. Purchasing for cash, that means buying goods, paying cash. Cash goes out, which means this 80,000 should be subtracted. When 80,000 is subtracted out of 100,000, 20,000 is remainder. 20,000 is the remainder. Selling all the goods purchased for 110,000. All right. You bought the goods for 80,000. So 80,000 cash went out. 20,000 remainder. Now sold all the goods for 110, which means this 110 should be added to 20. Then 110 plus 20, 130. After adding it becomes 130,000. 20 should be added to 110, then it becomes 130,000. This 20 should be added. Okay. Then 110 plus 20, 130. What is the next? Purchase of a building, 40,000. Again, spending money. Money goes out because purchasing a building. That should be subtracted. Again, subtracted. When 40 is subtracted from, oh no. When 40 is subtracted from 130, it becomes 90. 90. Got it? Adding and subtracting. 130 out of 130, 40 is spent now, so 40 should be subtracted. It becomes 90. Next, payment of employee salaries, again spending cash. Out of 90, this 80 should be 8,000, not 80. Not 80,000. 8,000 should be subtracted. Then it becomes 82,000. 90,000 minus 8,000. Last but not least, obtaining a bank loan. Again, cash comes into the business. Why? You take a bank loan means 30,000 of cash you're getting as a bank loan, but cash is coming in 30,000. 82, this 30 should be added. To 82, this 30 should be added. Then the final answer becomes 82 plus 30, 112,000, yeah? 112, yeah? That is the final answer. The remaining cash balance, 112,000. Okie dokie. Is it there? It's there. 112,000. 112. Easy. Next, 20th. Same thing. Same information. What is the equity of Suresh's business as at 30th? What is the equity? Now, children, we know that equity is changing only because of these 4 transactions. Same thing. I don't need to say these things again and again. 1, 2. 2 events increase equity and these 2 events decrease equity. Okay. Increasing and decreasing equity. I'm not going to repeat the events, the transaction. You have to remind yourself. Out of these 4, 5, 1, 2, out of these 1, 2, 3, 4, 5, 6 transactions. Out of the 6 transactions, which transactions affect equity? Sort it out. Then you get the answer. Introduction of capital, that is the opening capital. Okay. Opening capital. Now, because of cash purchases, is it affecting equity? No, it's not affecting equity. You spend cash, pay cash, pay cash, but buy goods. No loss, no expense. Huh? Sale of all the goods purchased for 110. 80,000 worth of goods sold for 110. Isn't there a profit? Isn't there a profit here? There is a profit. Calculate the profit. Take the profit. 110 minus 80. How much is the profit? Huh? 20, 30, 30,000. 30,000 profit is there. That should be added to equity because profit increase equity. What else? Purchase of a building? No. Payment of employee salaries? Yes, this is an expense, right? This 8,000 should be subtracted. Expenses, losses, decrease equity, subtracted. Obtaining a bank loan? No effect. Okay. Now let's take the answer. Let's take the answer. When you add to opening 100,000 capital, when you add 30,000, the profit 130, it becomes 130,000. Okay, then subtract this 8,000, it becomes, when you subtract this 8,000 from 130, subtract 8. How much? 130 minus 8, 122 is the final capital or the closing capital. Is it there? It's there. What is equity of Suresh's business? 30th September. Yeah, okay. Underline the answer. Yeah, like that. Okay. We are done. Moving on. 21st. Matching. Yeah, matching. X and Y columns of the following table show the ledger accounts and the double entry principle used to record transactions. When X and Y are correctly matched, what is the correct choice? X and Y columns of the following table show the ledger accounts. These are ledger accounts, right? X column shows ledger accounts. Ledger accounts. Ledger accounts. X column shows ledger accounts, right? And the Y column shows double entry principle. Y column shows the double entry principle. Double entry principle. Got it? Match. Debtors accounts means what accounts are debtors accounts? Asset accounts. Asset accounts. For asset accounts, what is the double entry principle? Asset accounts has the principle of what? Asset accounts has the principle of increasing debit, decreasing credit. Increasing debit, decreasing credit. Increasing debit, decreasing, right? Isn't that right? Now, increasing debit, no? Yes, increasing debit, decreasing credit. Asset increase debit, decrease credit. Okay, you can match debtors accounts here. X and Y are correctly matched. What is the correct choice? Asset increase credit? No, it's wrong. So this is the matching one. This is the matching one. Debtors account, asset increase, debit, decrease, credit. All right, let's check the next account. Capital. Capital accounts are what accounts? Capital accounts. What type of an account is capital account? Capital account is a capital account. So, increasing, capital increasing. What is the double entry principle? Increasing, increasing, credit, increasing, credit, decreasing, debit, increasing credit, decreasing. Equity increase credit, debit, no. Equity increase credit, yes. Okay. Right. A and D. Okay. 21st, fourth answer. Next question. Following transaction was taken place in business. Following transaction was taken place in a business. What is the transaction? This is the transaction. Sale of stocks to Ruvini on credit 25,000. Sale of stocks to Ruvini. Ruvini must be a customer, but now because she got the goods from us without paying, she becomes a debtor. Select the correct choice which contains the source document and the prime entry book respectively. Sale of stocks to Ruvini. Selling goods to Ruvini, this lady, this girl, and she doesn't pay us money, so it's a credit sale. Credit sales should be recorded in the sales journal. But first of all, what is the source document for sales journal? Sales invoice. Source document for sales journal? Sales invoice. Sales journal. This is the answer. Prime entry book is sales journal. Okay. First you should select the answer with the source document first, prime entry book second. Correct choice which contains the source document first, source document first, and prime entry book second. So source document is sales invoice, prime entry book is the journal, sales journal. Sales journal. Next question. Double entry to record a particular transaction is as follows. It's given. Creditor's account is debited. Cash book is credited. If creditor's account is debited, we know that creditor's accounts are liability accounts. Is that true? Yeah, of course it's true. Liability accounts. Creditors accounts are liability accounts. And liability double entry is increase, credit, decrease, debit. That is the double entry principle for liabilities. Decrease, no. If creditors account is debited, it is a decrease, no. Cash book is credited. Cash paid to settle the creditors. That is the transaction. What could be the transaction taken place? Credit purchases, no. Discount received, no. Settle the creditors, 8,000. Cash paid to settle the creditors. Easy. Well, I hope we will get this type of transactions. No, I mean questions in your exam. How good is that? Very good. For you, not for me. Right. Following table shows types of ledger accounts and ledger accounts. These are the types of ledger accounts. Types of ledger accounts. On this side, we have ledger accounts, the actual ledger accounts. Actual ledger accounts. Okay. When above two columns are rightly matched. Again, a matching. Matching. Asset, liabilities, incomes, and expenditure. Types of ledger accounts. Ledger accounts, the actual ledger accounts are given. Insurance fee account. That is an expenditure account. We all know that insurance has to be paid and we don't like it. Don't we? We don't like it. Yeah, we don't like it because when we have to pay every month. Money goes, money is spent. But if something happens, like a accident or something, or a fire, sudden fire, there's a fire, the building is on fire, something like that happens, then we like the insurance. Okay, insurance is there, so no need to worry. I love this. I love it. If we didn't have insurance, this damage destroyed my building, it will be my loss, no? And then when the a loss has occurred, when something has happened, then we love the insurance. But paying insurance fees annually or monthly, that is, yeah, it's just spending. No, we don't like to spend. So it's a expenditure, okay. Next, insurance fee account is expenditure. Cash account is a asset account. Creditors account is a liability account. We know that. Creditors account is a liability account. Finally, the only remaining income is the only one remaining, that is matched with interest income. Okay. Right. Nothing to think. We have already done. The answer is there. B is first. B is matched with the number 1 is matched with B. Number 2 is matched with C. So C is 2. Number 3 is matched with D. D is 3. 4 is matched with A. A is 4. What is the order? B, C, D, A. B, C, D, A. Here we go. Easy peasy lemon squeeze. B, C, D, A. Yeah, easy questions. 25th. Totals of the analysis columns of the petty cash book of Hiroshi's business. Given. Traveling expenses 270, refreshment 520, stationery 290, postage 60. Balance of the petty cash book as at 30th November. Yeah, it's the same date. 30th November. Yeah, it's the same date. Was 360. What is the value of the petty cash impressed as at 30th November? Again, 30th November. Why are they giving the same date, baby? Why are they giving the same date? Because it's a simple thing. Now, after spending all these expenses, after spending the total expenditure for traveling, refreshment, stationery and postage, still there was a balance of petty cash 360. Okay, how much is the total of these expenses? Let's say take the total, just add it up. 0, 0, 0, 0, 0. 7 plus 2 is 9 plus 9 is 18. 18 plus 624. Got it? Just do your calculations, man. I'm not going to do the calculations for you. This is 9 here. 2 plus 2, 4. 4 plus 5, 9. 9 plus 2, 11. 1140. No, you say 1140. Yeah, 1140. Okay. This is the total money petty cash spent during the period. Okay. Totals of analysis columns now. Yeah. Petty cash book of Hiroshi's business as at 30th month. This is the total. Okay. After spending this much, you have already, even after spending this much, still you have this much left. Add both together and you will get the petty cash float or the interest. That is the total amount of money kept by the petty cashier. 1140 plus 300. 1140 plus 360. 1500. That is what they are asking. That is what? Because the balance of petty cash book given here 360. We added that to 1140, the total spent. Answer is the value of the petty cash interest. Yeah. Yeah, we have done these things, right? Now, 26th. Use the following headings to answer questions 26 and 27. Cash book, sales journal, general journal, purchase journal. The prime entry books are given. What are these? Prime books. Prime books of a business, huh? Yeah. Surya Furniture Limited purchased furniture worth of 200,000 on credit on 1st January 2017. What is the prime entry book to be used to record? Easy. Surya Furniture Limited, that is a furniture manufacturing or furniture selling business. They are buying or purchasing furniture. That is the good that they are selling. So goods that they are selling is furniture and they buy that on credit. Goods bought on credit goes to the purchases. Goods purchased on credit goes to the purchases journal. Goods purchased on credit. Simple, isn't it? Simple. Again, same headings. Rushika, a debtor settled 12,000 and purchased goods worth of 15,000 on credit. Okay. Rushika is a debtor. She had to pay. She had a debt. Yeah. That debt was settled. She paid. We got the money from her, 12,000. And she purchased more goods worth of 10,000. If we got cash, goes to the cash book. Okay. This goes to the cash book. Debtor settled. This goes to the cash book. Purchasing goods worth of 15,000 on credit. She purchased goods, means we sold goods to her on credit. Goes to the sales journal. She purchased, but we sold. Go to the sales journal. So cash book is A, sales journal is B. A and B. Fourth answer. Yeah, that's how you do it. 28. What is the unusual item that can be seen in following ledger account balance? What is the unusual item? What the? Unusual item. Okay, now we have to find the unusual. Okay, unusual item that can be seen in the following ledger account balances. Never mind, never mind. Okay, we'll find it. Ledger account balances that can be seen in the following ledger account balances. A credit balance in a debtor account. Is it unusual? A credit balance in a debtors account? Because debtors are, like in the previous question, there was Irushika. Debtors have debit balances always, most of the time. Debtors accounts always have debit balances. Credit balance in a debtors account. It is unusual, no? Let's see. Credit balance in the discount received account. And it's not unusual. Discount received is an income. Income accounts are always, when income received, when we get incomes, income accounts are credited. So credit balance is there. Normally a credit balance is there, of course, in income accounts. A credit balance in the bank loan account, of course, bank loan is a liability. Debit balance in the investment account, investment is an asset. So assets are always debit. Asset balances and in asset accounts, always debit. So this is the answer. Next question. The balance of the bank account of Ayesh's business as at 31st October. Balance of the bank account 15,600. Balance of the bank account, the bank book of the business. What they prepare in the business, okay? Bank book, just like the cash book. That is called the bank account. And the balance mentioned in the bank statement received was different. First sentence, I can say that this question is from bank reconciliation statements from that lesson. Received on that date was different. Reasons for the difference are as follows. Unrecorded debtors remittances, these are called direct remittances, 2,800. Unrecorded bank installments paid, bank loan installments paid, these are called standing orders. Let's write them down. Unrecorded debtors remittances, these are called direct remittances. Normally, direct remittances is the word. Direct remit. Unrecorded bank installments, bank loan installment paid by the bank. These are called standing orders. Normally, that is the word used, standing orders. Checks issued but not yet presented, unpresented. Unpresented checks. Checks deposited but not yet realized, unrealized. Unrealized. These two go to the bank rec. When preparing the bank reconciliation statement, these two go to the bank rec. Bank rec means bank reconciliation. Upper items go to the adjusted bank account when we prepare bank reconciliation questions. The balance of the bank statement as at 31st. Balance of the bank statement. Okay. How to calculate that? If the bank account balance, or shall I say the bank book balance, the bank book of the business, the bank account balance, business bank account balance is how much? Here, 15,600. 15,600. In this, do we have we recorded the direct remit of 2,800? Have we recorded in the business bank account? Have you recorded the direct remittance? Online transfer, maybe somebody has directly put money to our bank account. We don't know that. An online transfer directly that has come into the bank account. No, we haven't recorded. But the bank has recorded, which means that 15,600, the bank account, business bank account balance, do not have this added. So should be added. This should be added. 2,800 should be added. Just like that, the standing order which has been paid by the bank, 800, it has not been recorded. So we should subtract that. It should be subtracted. 800 within brackets. Okay. Now let's take the answer. 2,800 should be added and 2,800 should be added and 800 should be deducted. And 2,000, 17,000, 600. Okay. Now to the bank rec items, to these items. Issued but not yet presented to the bank. The checks we have given, we have issued the checks, and that is a deduction. Bank account in our business has been credited when we issue checks, when we give out checks, when we pay with checks. That is the meaning of issuing checks. Our business bank balance, bank book balance, business bank book balance has been decreased. But they have not yet gone to the bank, which means bank, in the bank side, from the bank side, they haven't deducted unpresented checks. So this should be added back, 2,400. But unrealized checks we have put to our bank book as an addition, or we have added, but the bank is not yet, they haven't yet realized, they haven't taken these, so they should be subtracted. Now we are going to get the bank statement balance. 17,600 plus 2,400 minus 2,000. That is 18,000. Check whether we have the answer. It is there. It is there, 18,000. Don't cut the answer, underline. Done. Next, last question of this session. From 31st question up to 40th, we are going to do those 10 questions separately, because most of the time those questions come from the last lessons, the last accounting lessons of your syllabus. Yeah, mostly from non-profit organizations, production cost, and financial statements. No worries, not a big deal. The books of Netu Adeta, showed following balances. On 2016, January 1st, balance brought forward 24,000. That means she owing us. Netu is owing us. Netu is our debtor. Yeah. No, it's a balance brought forward. See? Balance brought forward. From the last accounting period, when we are starting the new accounting period, she still has 24,000 to pay us. That is the meaning of balance brought forward to this accounting year. Transactions took place during the year. Discounts allowed 1,200. That's a subtraction. Bad debts written off, again subtraction. Deduction. Cash receipts, again. We received cash from that girl, Netu. That means she paid us and just left with tears in her eyes. Now, why she needs to have a tear in her eye? She should be happy. She's paying off the debt and she's leaving. Cash received by us. Both parties happy. We are happy, she's happy, everybody's happy. But that is a deduction again from the debtors value. The balance of the debtors account, okay, 24,000 minus 1,200, it's 22,800. Let's do the calculation. 24,000. From 24,000, how much should you subtract? The total of these items. The total of these items. Let's add it up and see how much is the total. 1,200. 12,320. 13,520. 13,520. 14,000 is the total. Should be subtracted from 24,000. And the answer is 10,000. That's it. Yes, it's there. The balance of the debtors account as at 31st December. 1st January 2016, 31st December 2016. After 1 year's time, we have given her discounts and we have written off a 480 worth of debt that she didn't pay us. We have written off and we have received cash worth of 12,320. All are deductions. When deducted, that total remainder is 10,000. That is the final balance or closing balance. That is it. That is it. Final answer in question number 30 is 4. With that, the second session of 2017 Western Province third term paper, the MCQ paper, third term, first paper, is done. No, it's not done. It's not yet done. Up to the 30th question is done. We have 10 more questions to do. From 31st to 40, we're going to take in the next video. And we are going to finish off this paper, 2017 Western Province third term paper, third term of 2017. Hope to see you soon. As always, do your work. Have a good time. I'll see you soon. Bye-bye.
To watch these important lessons, subscribe to DP Education's YouTube channel right now. Click on the bell icon to stay updated on the latest lessons. Sri Lanka's largest free online school, DP Education.